US stocks started the quarter on a positive note while bond yields and the US dollar have fallen, and this sets up a pretty upbeat tone for the Australian share market today, despite Donald Trump's tariffs coming into effect from tomorrow. Welcome to the Daily. My name is Jessica Rumi, a market strategist here with Mumu. You're tuned in this Wednesday, April 2. It's great to have your company as always. Thanks for joining. So I think we might be seeing a little bit of optimism coming back into markets. That's normal in April, traditionally one of the strongest months for the Aussie share market and the US market, mind you. If we just pause on the Aussie share market, what have we seen on average over the past 10 years? Well, the ASX 200, that of course is the index that tracks the biggest 200 companies on the ASX, as we're showing on the screen, the Aussie market's risen about 2%. Let's call it 1.9%. For those who love specifics. So this is one of the best months for equities, but do consider what we have been saying, or what I've been saying, is that gains in April may be short-lived. And again, this is the same pattern that we saw in 2018, insert Trump's first trade war. Now, I think that we need to remember the tariff trade war playbook very quickly. What is that? Well, we saw the US market and the Aussie share market take two big falls before a third larger fall. And of course, they recovered from all of those falls, but it basically paints a picture that this year is probably going to be volatile. But I do think that you'll see pockets of gains vis-a-vis April again. Just worthwhile pointing out that gains in April are traditionally one of the strongest out of all the months. Now, what else do we need to consider? Well, a stock to watch that pricked on my radar overnight was Tesla. Now, Tesla, the most valuable out of all the stocks on Wall Street, it made the biggest jump overnight. Now, their shares jumped almost 4%, 3.6% to be precise. Now, investors maybe, just maybe, I pointed out to you, may be starting to buy the dip, expecting a rally in April. Now, bear with me here, please. April, again, traditionally a positive month for shares. Also for Tesla. Tesla shares have traditionally rallied 5.3% on average in the month over the past 10 years. Now, again, this is all despite bad news. So remember last week I spoke about why investors would think a bottom is in for a stock or a market. And one of those catalysts that inspires dip buying is when people ignore bad news. So insert this line of thinking now. So Tesla shares, as I'm insinuating, they've rallied, and this is despite the bad news that came out overnight. France, Tesla sales fell 37% in March. That's compared to the broad car industry that is seeing sales fall in France. Sales in total across the entire car sales industry fell 15%. Another piece of bad news for Tesla overnight, their dealership in Italy caught on fire, arson a possible cause. So again, I'm just saying, you just have to wonder how long the bad news can go on for. I just wonder when people start to see bad news being not as bad as feared, and that's probably when you'll maybe start to see the material shift in the needle for Tesla. But again, as I said a couple of weeks ago, I do believe that you'll need to see a couple of quarters of good, consistent growth for Tesla to really shift the needle. But again, just also think about the fact that Elon Musk has said he is thinking of standing down at Doge, and perhaps that's why some investors are starting to buy the dip into Tesla. Let's just take a big, giant step back now and think about the next major catalyst for the US market. Well, of course, we've got US earnings season coming up. It happens very different to the Australian share market. We only report earnings twice a year. In the US, they get earnings season once every couple of months, once every 3 months. Now, it starts in just 3 weeks with ASML and Netflix, the first big tech companies to report. All in all, my sense is that we'll probably see the biggest companies in the world and tech companies basically say they're concerned about tariffs. So we're going to see their guidance levels looking pretty bad. Now, this basically means that bond yields will fall because investors will probably continue to maybe take more money out of equities and tech companies and top up bond exposure, pouring money into bonds, is what I think. As for the economic outlook, it's looking increasingly bad as well down under. The Reserve Bank of Australia yesterday said something like the word uncertain 3 times. So in the statement that was published from the bank's Monetary Policy Board, the word uncertain was mentioned 3 times. And I think with that being said, we saw more certainty come into expectations for a rate cut in May. So what do I mean by that? Well, the futures market is now expecting a greater chance of a rate cut in May. The probability of a rate cut increased from 72 to almost 80%. And remember, the RBA is expected to cut rates in May, just days before the federal election in Australia. What's the next catalyst that you need to watch locally? Well, the RBA Assistant Governor, Chris Kent, speaks today. And of course, we've got Australian building approvals. Those numbers are expected to be released at 11:30. The numbers are expected to fall, and again, add into that notion that is really affirming the view on why we're expecting more economic pain to be felt, and thus the need for the RBA to step in and maybe cut interest rates. So this is maybe why you could see some inspired buying into tech companies because the market may now seriously start to price in or expect a greater chance of rate cuts coming in May. Moving to the political landscape, again, staying down under. So we've seen US tariffs, those new ones come into effect from tomorrow. We're waiting to see Australia's response, but basically narrative shifting again to expecting slower economic growth and higher inflation as a result of the tariffs from Trump. Thanks very much. But what's really interesting is the bets have actually increased for Labor to win the Australian election, which takes place in about 4 weeks. Perhaps that's why we're continuing to see money come out of nuclear energy stocks in droves. Really worthwhile pointing out, yes, Paladin has had its own bad news. As I expect many of you are aware, Paladin shares actually fell 25% in 5 days. But I think what's happening is the pain of Paladin is just basically highlighting the broad issues that are happening in the political landscape. The market is now simply telling us that Liberals won't win the election. The market is telling us, with that being said, that plans to build nuclear power will die. And that's why some investors are perhaps continuing to take money out of the broad uranium sector and they're moving into gold. And I really do think that it's worthwhile paying attention to this. I think this could continue to take place over the next maybe a month or so at least, but really worthwhile also more broadly remembering that unprofitable companies are all being hit with the ugly stick. For more information on stocks we've mentioned today, head to the comments section of where you found this recording. Have a great day.